are in listen-only mode.
Thank you for attending the webinar today on collection best practices. This is Jonathan Kovar, CEO of Health Trust Software, filling in for Whitney Vine for the webinar today. Wanted to briefly work with you to show you some of the collection activities that can take place through the Health Trust system and to give you an overview of kind of collection best practices in general. So let's go ahead and jump right into that process. Obviously, one of the primary goals of any business is to make a profit, and within the healthcare sector, you can't do that unless you have great billing and collection processes in place. We've covered a lot of the billing topics on previous webinars, and so now we want to focus on an area that's often neglected within home care agencies, and that's the practice of actually doing medical collections. You're probably very familiar with at least the concept of collections from visits to doctor's offices or to the hospital, where those types of providers have learned to be very diligent in their collection processes because that accounts for 30 to 40% of their revenue. Home health has not had to face those same types of barriers because typically there's not a lot of self-pay or co-pay deductible type situations within home care, but that is vastly and rapidly changing across our landscape. Those of you who deal primarily with commercial insurance companies are already familiar with co-pays and deductibles. But even on the government payer side, we're seeing a shift and a real fight for Medicare to start offering and requiring copays. We're seeing accountable care organizations move that direction as well. And so getting these collection practices in place now will only help you as an agency regardless of the primary payer sources that you have. Part of the compliance complex that we teach here as an operational model is that even if your primary payer source is Medicare or a Medicaid program where you typically don't have copays or deductibles, it's only wise business practices to start expanding that payer mix into commercial insurances, self-pay, and other mixed entities like accountable care organizations so that your finances aren't dependent upon one particular payer source. Agencies that have focused primarily on Medicare just predominantly are now starting to experience some of those problems as Medicare continually over the last several years implements reductions to the wage rates and wage indexes and market basket indexes, and now you see they're doing the same thing again in 2014 with some rather significant reductions to payment rates. The only way to really offset that is to expand the payer mix that you're operating with at your agency. And in order to do that, you have to have very good operational practices geared toward each of those payer entities. Meaning if you're working with Medicare, you have to perform an OASIS assessment. But if you're working with a commercial insurance, you typically don't have that same requirement. And just like at the beginning of that patient's admission criteria, whether you're the decision to send a nurse out to do an OASIS visit or the decision to send a nurse to do a non-OASIS visit could be the difference in $50 worth of payroll cost during that same time span or just for that particular visit. And when we look at the way that we deal with the billing and collections process is exactly the same. If you have the same billing process for your commercial claims that you do for Medicare, then you're typically going to be missing out on a significant amount of cash flow. I know a number of agencies who, because they're primarily geared toward Medicare, will treat their commercial claims as kind of a neglected revenue source, and so billing tends to get queued up for a month at a time, and all commercial claims are billed out on a monthly basis, and collections then may occur only after 90 days or so. And universally, when we conduct consulting audits of those agencies, they're losing a substantial amount of revenue because they've not properly identified the billing and collection processes appropriate for each of those payer sources. For instance, with most commercial payers, you can bill them on a daily basis and get paid on a weekly or even daily basis. If they cut checks every day, the quicker you get claims out the door, the quicker your cash flow is. A lot of agencies don't typically like to hear that because it does mean that there's more traffic rather than having one claim that bundles 30 charges together. You may have 30 claims that bundle one charge at a time. And sometimes that you definitely are dealing with a higher level of claim volume, but you're also dealing with a much greater cash flow increase. And when the system helps you, when you're properly utilizing the system, the increase in volume, number of claims, isn't really a big deal at all, because you are, at the core of collections, you're collecting on individual line items, and that's often what's overlooked within the collection process. One is that agencies don't have good collection protocols in place. They just assume that when they bill, as long as they get a response, then that means they're okay, or they wait until the RNS comes in and they only work the denials. The second barrier to a good collection process is that people who do implement claims-based collections typically don't feed down and realize that what you're actually collecting on is a line-by-line reimbursement. And so looking at just a claim to see whether the claim was paid is not, will still leave quite a bit of revenue on the table, because often you may bill 5 line items, 3 of those can get paid, 2 of those may get denied or written off, and in that instance, if you're only looking at claims that have not been paid, then you're overlooking some potential revenue at that point. So enough of that. Let's actually get into how the system can help you with your collection practices. And we're going to start at the very beginning, and that's with your payer setup. So if you go to Reference and Payers, you want to click on or add in a new payer. Some of the fields that are going to help you here, obviously with your billing, you want to make sure that everything is filled out correctly. Your line of business and categorization of your payers really comes in handy during the collections phase. The line of business is based upon government standardized lines of business, but the categories are up to you as an agency to set. And typically agencies will set categories similar to what I've put in here: commercial, Medicaid, Medicare, self-pay. It can be really advantageous to an agency to break these out even further, particularly Medicaid broken into traditional and managed care, Medicare broken into traditional and advantage plans. And even on the commercial side, it's often advantageous to break those into collection buckets, meaning you may have a commercial claims that typically would get processed a certain way. You can split those out via the category, and that gives you additional reporting capabilities when we run our AR reports and as we're looking at our collection activity. And the other thing we want to look at is on the Claims tab. There's a few things I'll mention here that have to do more with your ability to collect long term. One of those is the contract, the contract renewal date. Agencies have typically neglected getting contracts with commercial insurance companies. It's often a difficult process, but I would definitely recommend having a good process for communicating with your payer sources, getting under contract, getting those fee schedules, and setting up your contract renewal dates within the software. And as a collections team, it really falls within your financial area, and often your collectors will have the most information on this topic. But go ahead and set up a process for reviewing your contracts. And with that review process, when a contract is coming up for renewal, you want to make sure that your collectors are involved in that process to identify payers that have not been paying according to the contract, comparing that contract against other payer sources so that you can use that in your negotiations with insurance companies. Now, I will say, well, on the same topic, even though it doesn't necessarily involve collections, during that negotiation period, a lot of agencies will kind of dismiss that out of hand and say they can't negotiate or contract with a Blue Cross or with an Aetna. And I will have to say that a lot of that is because agencies don't have a good process for contracting with payers. They very often leave that in the hands of their some of the most inexperienced staff at their agency just to call Blue Cross and ask if they can get a contract, which effectively means that they get the generic response of go to the website, download an application, and kind of get pushed off into some bucket like everyone else. But if you look at the way that hospitals operate with it, they typically will have a contracting department. They will have people responsible for overseeing contracts because they recognize how valuable that is to their bottom line. And so it would really benefit agencies to focus more on those contract terms and that process for evaluating contracts. And one of the keys there within the software is simply putting in that contract renewal date. On your dashboard, we will notify you when that renewal date is coming up within the next couple of months. The other thing that will greatly enhance your ability to process your collections are these two fields right here, timely filing deadline and payment floor. The timely filing deadline field allows you to set at what point a claim is going to get denied because it's past the timely filing deadline. Although it's more of a billing function, one of the things we find most often as a denial at the collections level is missing timely filing deadlines. And when you're using an electronic system, electronic point of care, electronic care validation, and electronic billing, you should almost never have timely filing deadlines. Even the most the strictest payers out there that have 30-day timely filing deadlines, that should still not be an issue with most providers the vast majority of the time, because you should be able to turn around and have your time from the date of service until the claim is actually dropped should typically average 36 to 48 hours when you're operating at full steam. The thing that keeps your claims from being able to do that is going to be issues such as having poor validation processes, meaning it takes a long time for your visits to get care validated to go into the billing process. It typically involves late notes, nurses or other clinicians who just aren't turning in their notes on a daily basis, and so those are outside the topic of this webinar. But when you start looking at your collection practices, one of the first things I would do is try to identify all of the rejections or denials that we've had because of timely filing deadlines. Look at that as a percentage, and if that's above even 0.5%, then you know that you've got some issues, and you'll need to start investigating those processes that come before billing to identify where the problem is actually occurring. The other field you'll want to look at is the payment floor, and this is basically telling us the the quickest turnaround time. If we submit a clean claim to this payer, how often or how quickly will that claim get dropped into an actual payment? This helps us project our cash flow later on. So if we bill, let's say Texas Medicaid, who typically will pay on a weekly basis, we can set that up here, and then we have a better way of judging the cash flow that's going to come in on those particular accounts. Okay, while we're on the same topic, let's go ahead and go to our Services tab. The Services tab is also accessible under Reference Services if you go directly there. But the Services tab is telling us for each of the service types within the system what we're going to use for billing, meaning the HCFIX codes and revenue codes and charge amounts that we're going to bill on the claims. But there is a very important setup here for the collections process, and that is the reimbursement amount. Okay, so if you click on any of these options, the system will tell you how that particular service would be billed to this particular payer. So in this instance, we would be billing with a G code with a 0421 revenue code. Our modifiers, we're billing $150 per visit. And so all of that affects our billing, but then what we need to look at for collections is this reimbursement amount. And so with it, what this allows you to do is set, the system will automatically post a contractual allowance at the point of billing to offset the difference between your charge amount and what you should be getting paid. A lot of times agencies look at this particular field as simply a way of making sure that their AR is more accurate, as is the case in healthcare because of government regulations and just kind of the state of the industry. Charge amounts are universally inflated because you can't bill Medicare or Medicaid less or more than you bill any other insurance company, and so we typically set those charge amounts higher than we expect to get reimbursed from any particular payer source. But we know that we're not going to get reimbursed that amount. So if we were billing Blue Cross and we have a contract with Blue Cross for this particular this is a private duty nursing service here, and I know that I'm actually going to get paid $83.50, I would want to go ahead and put that dollar amount in the system. What's going to happen is when you bill the $150, the system will automatically make the deduction of the $66.50 contractual allowance here. So it does two things. One is it does keep your AR relatively accurate. So at any time when you run your AR report, you're looking at a more accurate representation of what your actual AR is. But even more importantly at times is that this, by having that contractual amount automatically written off, it helps you as a collector identify when a payer is not paying according to contract. So if you bill $150 and we automatically write off the $66.50 so that the balance remaining on your AR is $83.50, whenever you go to post your payment and your payment is $60, your collector is immediately cognizant of the fact that that payer did not pay you according to the contracted rate. And if you have your attribute system set up correctly, then you can very quickly flag that and run a report later on to find all of your Blue Cross payments that were not according to contract. And so when you tie that back into that contract renewal date, you can very quickly go into your contract negotiations with statistics such as 85% of the time we were paid at or below our contracted rate, or 10% of the time the Blue Cross actually paid us $15 less than we were supposed to get paid. In addition to that, to doing that during contract negotiation, it can very quickly help you spot issues within billing or your payer setup or your service code setup that's leading you to get paid less than you should expect to get paid. Without that in place, what would typically happen is a collector would take the RNS or import the 835 and immediately just write off whatever the balance is. So as long as you were paid any dollar amount that looked reasonable, they would put that dollar amount in as the payment and automatically write off everything else, the remaining balance, thinking that that's a legitimate contractual amount. But when you have good contracted rates and reimbursement amounts in the system, it becomes immediately obvious that you're not getting paid according to contract, or you're getting overpaid, and so you can track overpayments as well. But most of us are more concerned with tracking the underpayments than the overpayments, but it does help in both of those situations. So you definitely want to make sure that your payers are set up and that your service codes and reimbursement rates are as accurate as possible, because without those things in the system, it makes collections very much a shot in the dark. All right, well, let's look now at some of the collection practices that would actually go into play a little bit before collections during the billing process. Like I said, collections really is the last resort, the stopgap that to me means a lot more to an agency than just trying to get money in the door. You play a very vital role in identifying the issues that are plaguing your particular company. If your company has poor visit note turnaround times, the collector's the one who's typically going to know that, because you're going to see a lot of timely filing denials. If an agency has poor billing practices, if your billing and collection teams are different, it's that collections team that's going to be able to identify that more quickly than the billing department is. And so you've got a really vital role to play within a company. And so let's look at the actual billing process and how that would affect your ability as a collector. At the point of creating claims during the billing process, we have two attribute fields that are designed to help with the collection process. And one of those is attribute 1, and the other is a call date. These are designed so that whenever you run your initial batch of claims, you can already set up a series of collection attributes. You may want to set up an attribute that immediately goes into effect. That would be something like claim sent but not processed, or claim sent, no acceptance received yet. And from that point then, as you run your collection reports or your AR reports, you can search for all of the claims that have been transmitted but not accepted. And then, of course, as you work through your collection tickler system, you would be able to update those attributes very easily to walk the claim through until you get into the payment system. At a minimum, I think at the attribute level, you absolutely have to have all of your denial reasons, and you also need to have any type of rejections for the claim, as well as any type of pending status. So those of you who bill Medicare, you're accustomed to kind of getting those SB codes where the claim has been dropped into some type of pending status or an RTP status. You need to be able to track those during your collection process. And so I would have attributes set up identifying each of those. The other thing I would recommend doing is immediately setting up a call date. And this is, you're basically setting up a date to remind you of when you need to follow up on this claim. If it still has an outstanding balance or hasn't been paid, you want to make sure that you're following up on this particular batch of claims well before your timely filing deadline would come into effect. And so typically a collection process would have these claims followed up on within 10 days of billing. So if I was billing this today, I would look at my calendar and I would say, okay, we want to, we're billing these on the 1st, and in this particular instance, I'm going to bill a batch of commercial claims. And so next Thursday or even next Wednesday, a lot of times with commercial claim billing, we may want to bill on a Thursday, Friday, because of the way that visit notes trickle in. So if we work shift visits, we may need to have all 3 of those shifts in the system before we can bill that particular date of service, because a lot of payers will see that as duplicate billing. If we bill one shift for a date of service today and we bill the second shift for that same date of service tomorrow, most payers will deny that for duplicates, and so you need all of those shifts to be in the system. If you're doing like PDN services, then it may be beneficial for you to set up your billing practices where you actually bill on like a Wednesday, Thursday, Friday, or Wednesday afternoon, Thursday, and Friday morning, so that you hit any kind of, you're well in advance of any payer weekly deadlines for claim submission. And then that gives you Monday, Tuesday, and Wednesday morning for working collection projects, while those visit notes are turned into your office for the past week. And so that typically works out if you have a smaller billing and collections department, or if billing and collections are combined together, if your biller is your collector, then it often works out really well to have a weekly process where, like I said, Monday, Tuesday, and Wednesday morning is geared toward getting those notes in the door and geared primarily toward collection activities. And then Wednesday afternoon, Thursday, and Friday are geared toward actual billing processes. And so if that was the calendar that we had set up, then I would want to make sure that if I sent these claims out on today's date, then I would want to make sure I'm following up on those, let's say on Tuesday, because that would give me plenty of time in a typical scenario. If you're dealing with our integrated clearinghouse options, which we'll talk more about on the monthly webinar this afternoon, we've got some pretty significant and fantastic changes coming in that regard as well. But if you're using our integrated clearinghouse services, then you should anticipate having a response back by Friday from the clearinghouse, and I would anticipate having a response back from the payer. Although there's no standard for that, it is typically received within 48 hours. So because we don't want to duplicate our efforts, we're going to go ahead and give them another 24 hours. And I would say I want to follow up on these claims on the 6th to make sure that they've moved into that next process. And so then as I hit filter and I go through my normal billing process, when these claims are confirmed and I start my collection procedures the next week, when I run my AR report, I can filter that by my call date and just pull up the claims that need to be called on or before August the 6th. And I have my tickler list, right, my list of claims that I need to work from. Okay, so let's move into the actual collection process. And I won't keep you on much longer, but I do want to walk through some of the features within the software that would actually help you with that. First of all, when you first log in and you go to your dashboard, under the billing tab, because this is a joint billing and collections type activity, do want you to just quickly notice the last two alerts that we have in the system on the billing tab. One is the timely filing deadline, and the other is your contract renewal date within the next 60 days. The timely filing deadline is identifying charges that are within 7 days of that timely filing deadline. So if you set Blue Cross up to be on a 30-day or a 90-day timely filing deadline, when you get within 7 days of that deadline, those charges are going to start showing up here on this dashboard. And so you want to make sure that you're looking at this dashboard on a consistent basis. Otherwise, you won't have the ability to collect those, right? They're going to drop off and get denied for timely filing, and in that instance, there's very little that you can do outside of a major appeals process, and which is very often unsuccessful. And so just by utilizing this one alert, you can cut down on virtually all of your timely filing deadline denials. But in that same way, you have to make sure that the payer is set up first. If the payer doesn't have a timely filing deadline filled out, they're never going to show up here on this dashboard. The other thing you want to take note of is the contract renewal date within the next 60 days to make sure that you are getting prepared and are already in the process of renegotiating those contracts with those payer sources. And so look at both of those things. The timely filing deadline, I would recommend looking at least once a week, if not daily. The contract renewal date, you would definitely want to look at least on a monthly basis, if not more often than that, depending on how many contracts that you have. Okay, the other thing we want to look at is our how we would actually conduct our tickler system. And what I would typically recommend is that if we were working that Monday, Tuesday, Wednesday morning collections routine, as a collector or collection manager, the first thing I would do is go into my report center and I would look at the AR report. This is what I would use for assigning out collection activities to individual staff members. You see that we do have an agent field where you can assign those claims to a particular employee. Within this report, some of the important things to recognize is that if you do run a multi-branch location, you can filter this by provider. You can also automatically break the report. So if you're going to print this out into multiple pages, you can break it so that you have a different report for each of your provider locations. You may also want to do that by payer category, and this is where the categories that we talked about earlier really come into play. So if you have a collector who's dedicated to Medicaid managed care payers, and you have another collector who's dedicated to your Blue Cross and Aetna, so your large commercial claims payers, and you also have another collector who's geared towards your lesser known commercial payers. Maybe you have like a workers' comp payer or a military payer within your area that requires extensive collection efforts. You may want to have different categories for each of those. Well, then on your AR report, you could print out one report, but the system will automatically break those into pages every time the payer category changes. And so those are the two main breaking points within the report that I think are typical. You may also want to do it by attribute, which is that the status code. So if you're working a more detailed collection process and you want someone, let's say you just need to very quickly get in and make sure that you're working through all the claims that are not on file, then you could break and filter based upon the attribute. And so that would give you some options there as well. So when we look at this particular report, obviously we have a lot of filters, just like we would on any of our reports. But if I was a collections manager, one of the first things I would do is break the report either based upon payer category or provider, and we can do both. So I may want it broken out by office and then by payer category. So I'd have that option. And then I would want to go in and filter down to the area that I need. It is an AR report, so by default, this report is only going to give us claims that still have an outstanding balance, either positive or negative. It will not show us claims that have been billed and paid and the contractual amount has already been written off, and so the balance is zero. It's only going to show us claims with a particular balance. So within that, depending upon what I'm trying to do, if I just wanted to run a typical collection process, then I would go in here and, like I said, filter it and sort it the way that I have, and I would want to go ahead and just run that to the screen. And that would give me my collections process. And so I see here now I have it broken out. If I was to print this, I'd have multiple pages. One for my East Texas office, for my Medicaid category, and now I have a collection list for my Medicare claims that still need payment, and then I have one for my hospice provider, again for Medicaid and then Medicare. And so very quickly, without doing a lot of work, I already have all the collection files that I would need. So I could print this out and hand it off to my collectors, and when they look at that, if I wanted to kind of shrink this down so that it fits on a single page better, I probably would have removed these particular categories because I have my balance, which is really all that I'm worried about. I would probably want to know what was billed, what was paid, but these other adjustment categories I'm not really worried about because we still have a balance, and I'm going to go in and work these claims anyway. I would definitely want the notes field because this is going to tell us what has transpired on that particular claim in the past. Most of you are probably familiar with the way the system operates in that it does automatically put a number of claim notes into the system for you. As soon as when you bill a claim, we will automatically put in a note with the date and time, who billed the claim, how it was transmitted. So if our system transmitted that claim to the clearinghouse, it's going to tell you that it was transmitted to the payer via Availity or transmitted to Availity, give you the file name that goes along with that. We would tell you if it was transmitted to Medicare, if that went through our integrated process. We would tell you that the claim was created but it was not transmitted, or that it was created and errored out. If like this week when we had a few of the issues with the claims actually getting generated, the claim file itself, you would immediately see that in the notes because it would tell you that the claim was created but the transmission errored. And because of the way we stack those notes, this is if you've ever wondered why in the system we force comments to be there forever. You can't delete comments out of the system. And we also automatically date and timestamp them and put the username or the person's name who entered the note in the system. We do that because of this very process. After billing lots and lots of claims, it's very easy for someone to try and hide what's taken place or lack of collection activity by deleting out notes or manipulating notes. And what this does is by automatically putting those dates in, you get a descending chronological order of all activity that's taken place on a particular claim. So just by pulling this up, I can see that on December 29th, that was the very last time this claim was touched in our collection process. Before that, it was transmitted on June 11th, and it was originally transmitted back in April. So without having to go into that claim, I already know that it was transmitted, who billed it. I know that there was a problem with it because it was retransmitted 2 months later, and now I know that we haven't actually touched that claim until we rebuild it again back in December. Okay, so I already have my history. You'll also see that we have the days sales outstanding, which is the date, today's date minus the date that we actually transmitted the claim. So we created this claim back in February of 2011. 887 days have elapsed since that time point. Obviously, we would hope and pray that your DSO is much less than that. We would definitely hope that, depending on your payer source, if you're a Medicare agency, then we would expect that DSO to be under 20. If you're a Medicaid agency that deals with a lot of commercial insurance, we would expect that DSO to be under 45. And so you could, if you wanted to ever find out that number, instead of running this report to the screen, you could have run your AR report, export that to Excel, and very quickly get just run an average of that DSO number based upon however you filtered it, and you would immediately know what your DSO is for any particular type of activity or type of claim. And so I would hand this down to my individual collectors so that they can look through it and begin going through the process of collecting on these particular claims. Now, the way that would work is if I printed this out, we have the claim ID number, which is very important. I'd make sure that's on my printout that I give to my collectors. Then what they would be able to do is very quickly just go into the ledger menu, click on Advanced Search, type in that claim. They can click on this magnifying glass, and this claim details screen is designed to be a collector's best friend, meaning it gives you all the information at a glance that I would need to collect on this particular claim. I know this is a Texas Medicaid claim, so I have their phone number right in front of me. If we had a contact person at TMHP that I would need to get in touch with, I could do that. In this particular instance, I know that I can immediately check claim status via their website. You'll see some really cool announcements regarding some automatic claim status inquiries in the very near future. But for right now, if you needed to log into, let's say you're working with a clearinghouse like Availity or MDON, and you wanted to get on their website, and that's how you were checking claim status rather than calling in. On the payer setup, there's a website and a username and password field that you can include there. That would give you this information. So all I'd have to do is click on this link. It takes me directly into my collections page. And if, depending on the payer, you could even have it immediately direct you. Like in this case, we have a Text MedConnect username and password that we would need. Rather than putting in just tmhp.com, I could have put in this entire URL so that it takes me directly into Text MedConnect rather than just to the TMHP website. So anyway, I have the information I would need to contact the payer, and this little link here actually takes you into the payer screen, so you have all of their information, including your notes. So if you keep notes on different contact people at that payer's office that can help you, that would be available to you. You have a link to the patient, but you have the general information that an insurance company would need. So if you're using their automated phone system, they often ask for the patient's date of birth as well as their insurance ID number. You would be able to type that in very quickly. We give you the charges that were included on the claim with links to look up each of those individually. So if you needed to know, we give you at a glance the main collection information that you would need to know. So what HCPCS code, revenue code, modifiers, the quantity and charge that were billed. Very often people bill using an incorrect HCPCS code, or they've left off a modifier, and so this makes it really easy to identify when that's taken place. We also give you a historical listing of every ledger transaction. Whenever you bill a claim, we automatically post that bill amount as a transaction. If you had put in a reimbursement amount, you would see at that same time a contractual allowance amount that would have been written off. You can click on any of those transaction links to pull up the exact details. So if you had a payment that was only a partial payment, rather than having to go track down what check that was processed with, the date or how much, all you'd have to do is click on that transaction number, and it would immediately tell you the check number, the check date, the deposit date, the overall check amount, since this payment typically is included in a larger check, and then, of course, what was actually posted. So we posted to this charge a bill of $150. You can see who it was billed by. You can see any type of transaction notes that go along with that individual transaction. Of course, you have your previous notes for the claim itself. And as you conduct any type of collection activity, and if I could type here, claim is on file. And as you just hit the submit button, and you'll see that the system automatically date and time stamps that. So when we run our AR report next week, we know that I checked claim status and that the claim shows to be on file. At the same time, what I would do is, with my attribute system, I would want to choose the next status. So I would have an attribute that says claim is on file and have that chosen for my attribute. And then, of course, I want to set up my tickler system to tell me when to call on this claim again. So if by a certain date this particular claim hasn't been paid in process, then I would want to say, okay, I'm going to call again at the end of this month. And that would set that call date for you. So on our AR report, again, we could filter by call date and just get the details of, once, just to be clear, when I run this particular report, if this claim has already been paid and has no balance, once again, it's not on my AR report. So I don't have to worry about going in and taking off call dates once a claim has actually been paid. I really don't have to worry about changing the attribute to show that it's been paid, because on my AR report, if it's been paid and the balance is 0, I don't have to worry about that claim anymore. It automatically comes off of that AR report. Okay. The last thing I'll mention is just a couple of the other reports that a collections manager would want to know about that become really beneficial when just kind of assessing the overall health of your agency. Any of these AR aging reports are really good. I would typically run an AR aging report by payer because I would want to know, it helps me to identify very quickly where we're having issues. A lot of times it's very easy for a payer to stop paying us, and if we're not on top of that payer, if somebody's not working, then like we typically have our pet payers like Medicare or Medicaid, and we forget about Superior, and if Superior hasn't paid us, we may have $30,000 or so outstanding in an account with them, but we don't have a collector constantly working it. Running this report once a week or so would really help us identify the payers that we need to put to give some TLC. We also have, you can run your AR aging based upon the date of service rather than the claim created date, which will give you just a little better indicator if there are problems pre-billing. So if there are problems with clinicians turning in their notes, or problems with your QA team or your validation team getting those notes QA'd, or problems with billing actually getting those out the door, this can help you identify some of those areas. Same thing with your AR trending report. That gives you some of those details on an individual basis. So if you wanted to find out how your AR trends at an individual level, you can do that. And then last, if you ever need to get into the very base level details of anything that's ever happened within the system, those are going to be these transactions reports. The transactions report itself is the very lowest level report we have for a collector, and it identifies every single transaction individually that's ever been put into the ledger system. Of course, you've got a ton of filtering options that go along with that, but if you ever find that you need the details at a very, very base level, that transaction report is the report you'll want to run. Like I said, just to kind of recap this particular webinar, make sure that your payer codes are set up. Make sure that your service codes are set up with proper reimbursement amounts. Make sure that you are looking at your dashboard on a weekly basis. Make sure that when billing, you're assigning appropriate attributes and call dates. On the collection side, make sure you are running your AR report on a weekly basis and assigning those out as appropriate. Use your ledger screen with that claim ID in order to identify the history on that particular claim and any of the call information that you would need. And then run these other AR reports in order to help you assess the overall performance of your agency. Now, for those of you who will be with us this afternoon on our monthly update training, you'll get some additional information about some clearinghouse options that we will be offering in the very near future. So I won't spoil that for you, but since you're on this collections webinar, I'm going to go ahead and give you the heads up. It would be very, very beneficial for you to be on the update training this afternoon, because you're going to get several new tools that will also help you within the collection process, and we'll discuss those this afternoon. But for now, I'm going to head on out. I hope you enjoyed the webinar. It will be recorded and available for you to download and share with your staff within the next couple of days. So thank you, and have a great weekend.